Ladies and gentlemen, boys and girls, welcome to the SoFi Weekly. Today, joined with me is the great and powerful Roy Crossroads. Down below is an even stronger, even more powerful thesis, fundamentals of investing. Not to talk you down, Roy, but thesis is also, I should say, equally great.
Stop kissing ass. We both know you're the reason we're late.
Yes.
My girlfriend was making me a drink. I had to wait. It's all about love. Anyway. Holy crap, guys. We just got something very exciting. Do you see it, Roy?
Yes. Yeah. Teva saw it too.
No, wait. It just happened just now, right now.
Oh.
Ladies and
Kelly
gentlemen.
in the chat? Because that's pretty exciting.
Oh, somebody probably joined backstage. It's probably not going to be as exciting as he... Unless it's Anthony Noto, it's not.
Why are you talking down to this guest? Ladies and gentlemen, please welcome Stephen Fiorillo.
Esteban.
With the
7
salmon shirt.
p.m. I mean, really?
What?
7 p.m. Really?
Yeah.
You guys are a late night act. Like, what's going on?
You made it perfectly on time. Why was this such a problem?
It's early.
Well, you weren't doing anything.
I don't understand why people are calling me out that, like, I just jumped on the bandwagon of SoFi. People call me out on Twitter. People call me out on Seeking Alpha. What's wrong with these people?
It happens every time. I mean, people were doing the same thing when I was posting charts about Palantir back at 40. Like, oh, sounds like you missed the boat. It's like, no. But there's always bandwagoners, and there's people that love to call it out, and whatever.
Well,
like, they
maybe
can call me
people
whatever.
should do some research before they start putting stuff in writing. Just saying.
No, that's not most of the American public, though.
Wow.
M. Russo said, can you read us your new article? We'll give you 30 minutes, Steve. Go right ahead.
No.
Okay. Next on the news, then. We'll move on from that.
We'll talk about it later.
Did you guys see the update from Data Driven Investing on the institutional holdings? He customized the chart. What did you guys think about this? Because for some reason, I just think that's not going to be what it looks like whenever they post.
Did you actually see when they really posted? It's exactly what it looks like.
Did they really post it?
Yeah, go to Chris's latest tweet.
How dare you?
It's like copy paste what he put down, which is really funny.
Are you besmirching Data Driven?
I wish he was able to come on right now.
Like okay, pull it. Yeah.
Okay, ready? That's the one he created.
Which was a joke. He was saying it's going through the roof, and then that's the actual chart.
Well, he didn't say it was a joke. He said they came in at 567 million, and so he put it up to what looked like to be 567 million. But holy crap.
The graph didn't even go that far, is what I'm saying.
Thank you, George, for the 100. Really do appreciate that, man. But yeah, the chart definitely had the axis adjusted, so they are spiking.
Yeah, and you have to be careful there of the Y axis, but no, like that's a meaningful spike. That's not nothing.
Roto. Okay, so Steve, you have been impossible to get a hold of. I've messaged you so many times. It's been kind of rude.
About you messaged me so many times. Stop.
Oh, by the way, if I was too quiet, I apologize to the people listening. I should be louder now.
Just call me. Like, what are you doing?
What do you mean stop? Okay. Where have you been in the landscape of SoFi lately? Because I know that you've gotten pretty upset.
So, Steve, welcome to SoFi. Can you just tell us why you started investing in SoFi and what percentage allocation it is for you?
Yeah, why'd you open up a position?
It's really great to see people buying in at 14. So I'm really curious to see from new investors like yourself
I saw an interview on Kramer, and this guy Noto sounds like he's super smart, and Kramer loves it and says he's known this guy his whole life. I mean, he must be smart. I mean, I figured I might as well invest.
It is a little bit funny how often Noto goes on Jim Cramer's show. I think that they probably are friends at this point, honestly. So,
but actually, though, Steve, what are you thinking about SoFi right now? I saw the article. You said strong buy. Where's your head at?
Did you read it though?
No, I have not read it yet.
So you want the Cliff Note version. You heard the earnings call. The only thing that I care about for the 2025 catalyst, since obviously I disagree with the whole business banking avenue they're going down, is the tech platform. And it looks like there are many RFPs that they are involved in, several with large financial institutions. The RFPs have currently taken 12 to 18 months, and it looks like Noto is pretty confident they're going to win some of these contracts. And for them to get a tech multiple or a hybrid multiple, and for the narrative about just a bank to finally be dead, they have to start powering some of the big banks on their platform. And when they do that, banking as a service / AWS of fintech becomes a very real thing. They generate recurring revenue from an incredibly sticky solution, because once banking institutions switch over, they're not switching off of it, because it's going to be a tremendous uphill to transfer off of their legacy banking system. They're not going through an implementation twice. So now you have SoFi, which is decreasing their costs by 60 to 70 million a year from the fully integrated stack between Galileo and Technisys. They are taking market share away from legacy banking institutions, and they'll be diversifying their revenue from legacy banking institutions into their ecosystem from the tech platform. And that is the big catalyst for 2025. We just need one or two big names to sign on, and being valued as a financial institution goes out the door.
so why are you bearish on SoFi then?
So bearish. I mean, I haven't written an article that was anything but strong buy. And look, I've said it before, I'll say it again. I think it's a mistake what they're doing on business banking. I think that could have been a huge catalyst. I don't want to see it go the way of insurance. I really want business banking in-house, because looking 5-10 years down the road, for them to become a top 10 financial institution, you have to have business banking. And it's not just the business checking, savings, and lending. It segues into asset management, because not only can they become a custodian of assets for companies, they can be the administrators of their 401k and 403b plans. They already have a suite of ETFs and mutual funds proprietary to them. They'll get the management fee on those, and they'll get the asset management fee on the company's entire assets placed with them. It just so angry still that is not on the roadmap, and they decide to outsource that. It does not make any sense.
Tevis, anything on this?
No, nothing on this specifically. I was going to ask Steve how he thinks this affects the stock price towards the end of the year. I mean, I know we did predictions at the beginning of the year when we didn't really know the rate environment, and that's changed a little bit. But now that we do have more information, I'm sure we can have 2025 numbers with a higher degree of accuracy. But I'm curious to hear, Steve, like from the earnings and everything you just said, like the underlying business is picking up steam in a way like they never have before. Does that finally get realized, and to what degree sort of by the end of the year? Of course, I think when they roll out the guidance for 25 in January, that's going to be a big moment for us to project forward.
Yeah, I mean, look, I think we all made assumptions thinking that the Fed was going to start cutting rates in either March or June. I don't think anybody really thought it was going to be September that they started cutting rates. I mean, I was always in the camp of May, June made the most sense. I wasn't a March person. Everybody was wrong. And a lower rate environment is incredibly bullish for not just SoFi, but financials in general. I think financials are going to lead the way next year. A lower rate environment is inclusive for business. You're going to get more lending. You are going to get more business transactions. It is going to be very bullish. And you want the housing market to be unlocked. I don't know where this ends up at the end of the year. Maybe we get to 15, maybe we get past 15. I mean, I don't know if Powell's really going to cut any more in December. We'll see. I mean, you got to look at what he said yesterday, but I don't think that the long-term trajectory on the dot plot changes. I do think we get to 3.5 by the end of next year and 3% by the end of 2026. And if you do that, I think it's going to be really bullish because you should get a lot of refinancing on student loans. You should get more personal loans being taken out, and the housing market unlocks. So lending goes up, but the big thing is their diversification. Financial services is, I mean, what's the number of financial services? It's like 38% or something like that. Lending was only 52% of their adjusted net revenue. So that's the big thing. Financial services was a loss leader, and it just became profitable a couple of quarters ago. Look at the contribution profit from it. I mean, the biggest thing is whether you use the product or not, whether you have an opinion or not. My opinion doesn't matter. None of these guys' opinions matters. What matters is the members' opinion. And members keeps going up. They added more members than any other quarter, 700 and something thousand. This is a company that's going to end 2024 most likely with more than 10 million members. And that was always a big key milestone that we've been saying. And I think that next year they can grow more on the members, more than this year. Word of mouth is a very big thing. These guys continue to laugh. Nothing changes. And, you know, I think that this thing can really become something big. But to get away, the only narrative that we need to shake now is just the bank. Guys, shake that. The only way to do that, SoFi is in a position to do something no one else has done in the space because nobody else owns the back end like them. And to get the multiple into a tech or a hybrid, got to monetize the tech platform and not just utilize it to create a better product at a cheaper rate.
I want to ask, you brought up there's going to be more members in 2025, more than 10 million. What's the prediction?
I mean, where do we finish this quarter? 9.3 something?
Yeah.
I mean,
Yes,
all they have to add is what, 650,000 or so to break 10? Something like that. I mean,
sorry, I'm in at end of 2025.
Oh, I mean, end of 2025, we could be at 12.5, 13 million, maybe more. Is that really that crazy? You do 700,000 a quarter, that's 2.4 million.
I'm just wanting to hear if someone says 14 million or 14 million plus.
I mean,
I don't think that they'll get there. We've
End
seen
of 25.
Yeah.
We've seen the rate of attrition as far as those that are outgoing members increase a little bit. So I think that part of that's a law of large numbers. As you have more and more members, even if the percent stays static, you're going to have more leaving the platform. But I mean, net they're growing rapidly. So I would be personally quite surprised if they have 14 to 15 million. But if they have Taylor Swift there like every other week, then maybe.
Yeah. Yeah. Dude, right now, I just found out she's in Toronto. She's like shutting down our entire city. Like the highways are closing. Like it's nuts. It's like the president is coming through.
More important, probably, honestly.
Yeah, the same thing that what happened with San Francisco whenever like Xi Jinping came to San Francisco or whatever. Like all the homeless, they just cleared it up immediately once Taylor Swift came through. And like, I don't know. It's like I've never seen anything like this. I never really lived through the Michael Jackson era, but I wonder if this is bigger or kind of on par from that. I don't know. Roy, you were definitely there. So like,
I'm not a music guy, so yeah, not sure.
got you. Got you. All right. So there was a funny little piece of news that I hope I didn't, or unless Roy, if you want to go on to what you had up here, do you want to go to that?
Yeah, just throw that up real quick. This is the rate probability since Stephen was talking about it. It's still looking more probable than not as far as the way the market is looking at it. 60% chance of a further rate cut right at the end of the year. It doesn't really matter whether that's there or not, but you can see like, well, I don't know if you can see. Let me scroll down. How much that changed in one day. Actually, I think 2 days ago it was at 80 something percent, close to 90. Yesterday it was at 72.2, now 59.9. This can change a lot before the end of the year. Honestly, it doesn't really matter that much. Just based on Powell's comments earlier, he mentioned that they are still fairly restrictive and that there is room to cut. Doesn't mean that they will necessarily as rapidly as they have been, but no, this is a really, really ideal environment for SoFi. Stephen absolutely hit the nail on the head. So he's the only one that called it. Nobody else. No, just kidding. But no, like honestly, like what's happening is our thesis. Like we set the end of the year targets for SoFi. Pretty aggressively. I think that all of us were at $20 or thereabouts. Maybe one or two of us were under. I know I was at 20.
I was higher.
Yeah. And the delay of the rate cuts, we were all expecting March. Didn't happen. It's delayed by 6 months. And so really what's happening as far as momentum is just catching up to that thesis that it was delayed by 6 months. We were wrong on the timing. And thankfully, we're holding mostly shares, at least most of us. Tevis, who knows? He's probably all leaps. No, not just kidding. But no, like the thesis is playing out. We're seeing that with partnerships that they're announcing. We're seeing that in the execution. We're seeing that in notice comments, even on Jim Cramer's show. So yeah, it's a great time to be a SoFi investor. I still think it's undervalued.
Yeah, I mean it's hard not to look at SoFi's 2026 expectations, which they'll probably beat. And especially now with the loan platform business, like I actually think we'll do more than 80 cents of EPS in 2026. Like I think that
I thought all the loans were bad.
Well, it's no longer our problem anymore. We can
thought the loan book was bad, though. I thought nobody wanted to buy them.
But
wasn't that the narrative the Bears were spinning, that they're junk and they can't sell them? Wasn't that the narrative?
Yeah, and they said that the accounting standard was fake and that we don't make real money, but yet BlackRock and Fortress and all these large asset managers are buying shit that's fake.
By the way, speaking of, have delinquencies spiked or is that still coming?
That's a mixed issue. I didn't like Anthony Noto's answer on the Jim Cramer interview because he didn't talk about the fact that they sold $81 million of delinquent loans. He was like, yeah, it's coming down because we're good at our job. It's like, no, well, that's not the full story. But yeah.
I mean, think about this. Right now, if they beat guidance and come in at 13 cents for EPS this year, they're trading at a forward PE of 100. 2026 earnings, and this is, I believe, below, because I think the range was like 48 to 60 or 48 to 70 cents or something.
No, SoFi's official guidance was 55 to 80.
Right. So at 47 cents on 2026 earnings, it's trading at 28.36 times earnings. The amount of earnings growth, they're expecting over 100% earnings growth next year, and then 70% the following year, and then 2027, 35%. That's the Wall Street analyst consensus. And Noto's probably going to beat all of that.
Yeah. It's actually, just pulling it up right now, it's kind of amazing how few analysts have projected out very far on SoFi. It's kind of a forgotten stock by Wall Street.
Well, I mean, you got 13 for this year, 14 for next year, 12 for 2026. Not horrible.
It's pretty small.
Usually once you get like 5 years out, there's usually only like 2 analysts that'll even touch that.
Yeah.
But yeah, so it is definitely cheap still, even whenever you consider that 47 cents of what Steve said is way below what their expectations were. And they said that that's their guidance if they plan on launching no new products. The loan platform business is already a new product, and it might be the most important product they've ever launched. Like, I cannot stress how important that product was. So people got excited that SoFi was monetizing their ETFs now. They have $1.3 billion in assets under management. They started to monetize that. They'll bring in $3 million, and last year they did not bring in that much money. Cool. Okay. In the first quarter of the loan platform business launching, we made $61 million. It would take 20 years to make what the loan platform made in a single quarter. It's so important. That wasn't here before. Where are we going to be in 2025 with the best macro environment? Not only more partners coming onto the platform, but existing partners like Fortress coming back for more. And then add on if they can potentially tack on student loans selling, not touching our balance sheet, but going directly to loan partners. We couldn't do that before Q4. That's actually happened in Q4 because we weren't servicing student loans. We officially are. And Steve, you probably missed that news. But SoFi is now servicing.
Really everything you just said.
You
saw the student loan servicing news?
Yeah, dude, I don't just sit there and eat pineapples.
Random fruit.
It's an inside joke. See, Tanner can't even speak right now. He lost his train of thought.
No, because you're a freaking weirdo, dude.
What I mean?
I can't wait till I meet you in freaking New York, and I am probably bigger and taller than you, and you're gonna talk your shit, and you're gonna try your karate on me, and I'm gonna tie your ass up with jujitsu, and you're gonna have freaking no chance.
Didn't you hurt your shoulder rolling around on a mat?
Nonsense.
Didn't you hurt your shoulder rolling around on a mat?
That was with real competition, not little like practice like you.
Okay.
But Roy, aren't you excited? It's going to be me, Roy, Amit, and Steve in New York.
Yeah. I mean, I'm glad to see you again, Tanner. But like meeting for the first time, Steven and Amit is going to be awesome. Sorry, Tevis.
Well, I told you guys before or after the event. Let me know which it is. I'll take you guys out.
Yeah, probably after. It sounds like, but
I'm not being real. I'm just having a fun time with Steve.
How tall are you, Steven?
You'll find out.
He's 5'7".
I knew he was going to say that. Like, this man is so private. So Steven's not even his real name, you know? No, just kidding.
Tanner's going to find out a lot.
Yeah.
He's bringing us to the most expensive restaurants that he can find to see where our budget lies, and I'm going to get beat.
What are you talking about? I told you I was paying for everything.
No, you didn't. Well,
look at the group chat.
That's not going to happen. You said about breakfast because that I thought.
No, I said about everything.
Esteban is a Palantir shareholder and investor, so he's all right. He's sitting pretty.
Yeah, no, and that's true. And he's a extra shareholder because you bought him some, right? Isn't that what you bought?
Robinhood. It was Robinhood.
Oh,
yeah. I hope you didn't sell that $100 of Robinhood. By the way, it's like 300 something bucks now.
It's somewhere there.
Yeah. Did you ever add to Robinhood, by the way?
No, I'm a moron.
Shame.
I didn't look. I couldn't get past my own bias on that or Rocket Lab. What can I say? Can't get everything right.
Oh yeah, no, you can't be in everything.
Nick Moss is calling you out. I don't know who this is, but he's saying
I don't know who that is, but I promise you, he does not live next to me.
Yeah, because by the way, this is a true fact. The property beside Steve's property is Steve's property.
I own it. Yeah, pretty much.
So nobody lives next to Steve but Steve. But let's go on to this little speculative piece of news because this is a lot of fun. Unusual Whales tweeted that SpaceX is preparing to launch a tender offer in December to sell existing shares at a price of $135 per share. And SoFi said, interesting. I thought that was very interesting. And I think that SoFi's DSP platform is going to have a big piece in this. But what do you guys think?
Yes. No, I think that this really, what it tells more than anything else is that SoFi is absolutely going to the moon. Sorry. I didn't think it'd fall that flat. Come on, guys. All right.
No,
but no,
it's just Tevis is watching Mike Tyson and I'm
Yeah.
watching Tevis.
It's not on for quite a while.
So yeah, this
It
next year
starts
will
at
be
8 and there's undercard fights.
this next year will be really interesting just because, DPO and IPO market, it looks like it is heating up. There's been several rumors, and of course, Klarna, I don't know if they've officially declared or they look like that they are in the process of declaring here in the United States. IPO market has been very depressed. Just from, this is an IPO, it's not the same, but yeah, this platform, I mean, people don't even think about that when they think SoFi. So there's a whole lot of small areas that they're in that people have not priced in the stock at all. They don't think about it with SoFi. That, it'll be like 3 million here, 5 million here. That adds up, and that adds up substantially. So this company, like, it has so many tailwinds going into this next year. So, and it's really confusing. Like Steve was mentioning, like the election implications as far as financials, and of course the falling interest rate too. It's a little bit confusing, not to dip into politics too much, but as far as like, are there going to be tariffs? Are there not going to be? How is it going to affect this industry? What's it going to do here? Like the one thing that is very, very clear is that fintech and financials are going to do very, very well, barring some unforeseen black swan event. And so it's a great time to be in fintech. Like, just this run up is not baseless speculation on most fintech names, including SoFi. We've been in a fintech bear market of sorts, and there's been some that have broken free, like Robinhood. But a lot of fintech has just been lost, forgotten, and left for dead. And it's not. So yeah, this is, I think, just the beginning. Market is forward looking, but there's a lot more meat on the bones. And this indication right here, like this little eye thing, like they don't, this is not like Wendy's account or something like that on Twitter. They don't do that for nothing.
So I agree, but this is not an IPO.
Yes, I said it wasn't.
Yeah. So just to like that's the only thing that I'm having a hard time with is, can SoFi's DSP platform even handle this? Or like will they help with this deal? Or is
How
this?
do you know that it's not going to be through a fund?
Well, yeah, so that's the thing. Like SoFi is they could just be driving attention to the ARK Venture Fund that already holds SpaceX in there.
Which is what I originally thought was going to happen. Look, I would much rather buy SpaceX through SoFi if it's truly shares of it than these other third-party platforms that I don't necessarily trust. Even though I know people that use them, I just never used them. Because look, SoFi has all your information. They know if you're an accredited investor or not. So I think it would be awesome if they do. I think it's more likely that this is through a fund.
Well, it might only be, like an offering just for SpaceX own employees. So this might not be something for SoFi users. This might be, because this is what the DSP 2.0 platform was that SoFi will say, hey, SpaceX, tell your employees to come to this platform, and then we can sort of set up this deal between verifying their shares, you potentially buying them back, whatever. So that's what I think it is, rather than SoFi Invest platform users being able to have access to SpaceX. But I'm not sure.
Yeah, it seems like it's something different, more than just, I mean, honestly, you could already kind of access this through the ARK Ventures Fund. George mentioned that. I don't know. This seems like it's something different, more, and SoFi probably has a piece of that action, whatever that is.
Does SoFi, like, even if this is not an IPO, does SoFi have an accredited side of their business, so that if I am an accredited investor, I can go through SoFi to basically buy into that round for SpaceX? And if
Not
not,
that I know of.
yeah, like, why not? Why can't they introduce something like that?
Yeah,
I'm sure
not
it's
that
something
I'm
that they're
aware of.
looking into.
That'd be a cool first, company to do it with. I mean, with SpaceX.
But
Yes.
the DSP platform would be the first part of that for sure. Like, just to get the shares onto the platform for then to be distributed to accredited investors in the first place. So, I mean, that's step one.
And that's one way that they can build out the ecosystem and the invest platform a little bit more in a differentiated way than most have on the market versus like chasing what Robinhood is leading with, which it seems like Noda's not interested in that. So, yeah, it'll be interesting. But I do think like this is not a Twitter account, just to go back, or X account rather, that just throws out, and it's just an emoticon, but it doesn't do that. This isn't normal behavior. So yeah, it's worth watching.
Anthony Noto's account is like 2 for 2 with dropping EPS numbers ahead of time through hints. So I'm just saying.
Yeah, I'd be surprised if he does that again. And it may be incidental, but like a third time is like no. So
Yeah, the SEC joins the chat at that point. But so we're not saying like just because it's called a direct share platform does not mean that it's like a DPO or something like this. What it's really meaning is that if potentially now this is not even what SpaceX is doing, but if they potentially want to have another seed round or any company that could be private and they want to allow some of their employees to get access to those rounds, or for customers or family members to get access to those rounds. Usually these setups in the like the cap tables and everything will get set up with some large company like Goldman Sachs or Morgan Stanley, and they charge very aggressive fees. So then this company started in the UK called Primary Bid, and they were like, hey, we're going to do a software version of this. We're going to make it all, very cheap and easy, like self-directed in a way, and then companies can set this up and their employees can join in on these transactions.
Yeah,
or whomever that company will let allocate to there.
I think Carta is the biggest example of they basically just have a cap table that you can keep track of.
Right, but I don't think that they help facilitate IPOs.
I'm not sure.
I think I don't know this well. You're going to know this so much better than me. But aren't they like essentially a ledger to make sure that you track everyone's shares and everything?
Yeah, exactly.
So I think SoFi is going to try to play both parts in that, but I'm not sure. Anyway.
I mean, like right now, so my understanding is that second part of facilitating that sale, like that is only relevant for once you like essentially IPO or direct list or become available to the public, because everything else is a capital raise, which is a liquidity event for all the employees who have been holding the stock. Like, for example, I have shares in companies that I've worked at, and those shares are on paper valued at whatever the company is, technically valued at. I can't sell those shares because there's no market for it. And when the company raises another round, like a Series B, Series C, Series D, whatever, at that point, they would tap into their cap table to say, okay, guys, we're going to raise $100 million. Here's what that equates to in terms of shares per the value of the company. Do you want to sell or not? Because that is when the liquidity event happens. And like my understanding for this is that's simply all it is SpaceX is just allowing a liquidity event. They're raising more money, and they're not necessarily doing that at a scale where they open it to the public.
Yeah. So, but they could be allowing. So, here's a picture. We have to remember this little image because they could be offering only their employees or other, venture capitalists be purchasing this. But whenever it comes to those specific groups, they may need an account to fund and to send to SpaceX to buy those in return for shares. So SoFi is that registered broker that will collect funds, will create the SoFi Invest account, will allocate all that. So yeah, that's why primary bid needs some sort of relationship in the United States, and that's what SoFi is here to facilitate. But now SpaceX is just going to be another customer of that. I mean, this is not guaranteed. This is based on a literal emoji from SoFi replying to SpaceX of a Reuters rumor. So there's a lot of layers of, like reach here, but this is something that SoFi does, and it's getting close to that. Anything else that you guys saw this week that you thought was extremely interesting or wanted to touch on?
Just a little bit off topic, but I know I saw a couple of comments on this. Is if SpaceX was available for us to directly invest in, would you be interested in investing?
We know your answer.
Yeah, for sure.
Well, look, I mean, maybe I'll take the other side of this just for the sake of conversation, because I would be the first in line to invest in SpaceX. But at the same time, this is a company that's like $250 billion now in terms of market cap. At some point, those things matter because their mission is not necessarily to maximize shareholder returns. It's a very mission-driven company, and that money is going to be essentially in a money pit for quite a while. It's going to be dead money for a long time. So I don't know, $250 billion. It's one of, if not the most expensive private company in the world right now. The easy answer is to say yes, blindly, I'll invest in anything that Elon touches because his track record is impeccable. And I think Starlink, if that spun out and became its own company, like I would buy that hand over fist, because that does have a commercial application that does focus on returning capital to shareholders. Like it's focused on the actual commercial applications, right? Whereas SpaceX as a whole is focused on that Mars mission, and you're just going to lock that money in for longer.
I think it's interesting, right? Like there's a ton of companies that I would want to invest in, but you'd also have to look at how expensive they are. I mean, Palantir is a great company, but I'm kidding.
We can go down that rabbit hole. I got a lot to say about that.
After hours.
You think it's cheap right now?
After
I
hours.
think it's so overvalued. It's crazy.
Well,
and I've been in it since freaking 850.
We'll keep this for the after hours, but honestly, yeah. I was gonna say let's keep it for the after hours, and then I was gonna continue. So I'll be the better person here and push on. Did you guys see the Motley Fool news?
Nope.
I remember. I can't remember what it is, but I saw it. Oh man, I'm getting old.
I just put out a video on it, so the people who have already seen it will rush past us here. But
yes, yeah.
They did a best of 2025 awards for credit cards, car insurance, banking, personal loans, stockbrokers, and mortgage lenders. And SoFi got 3 separate awards. But most importantly, personal loans. SoFi got best personal loan. Out of any of them, 5 out of 5 stars. Upstart actually made it on the list for best emergency loan because they have instant approval, but 4 out of 5 stars. And yeah.
Do you want me
Robinhood got best broker too. You probably noticed that, but do
you want me to bring up some topics? Because I made a list. I just haven't made a video.
I do have one.
Robinhood did not get best broker.
Oh, they did not?
No. Fidelity got best broker. Robinhood got on the list at 4 out of 5 stars, and they got best online trading platform. But it was best overall broker. Fidelity actually won.
Okay. I do have one topic, if we don't mind it, related to SoFi. So one of the things that's changing here this next year, and it's not ambiguous at all. Gary Gensler's out. He has been in the stop everything crypto camp for the SEC, and he's done. Like day one, he's going to be replaced. We don't know who that is. One of those rumors is Dan Gallagher. There's some other names too. Dan Gallagher's chief legal officer of Robinhood. All the names that have been floated around are very open-minded towards crypto. They want sensible regulation. They see what the SEC has done, to really do everything that they can to absolutely hinder that industry. That's one of the reasons why crypto is pumping. Now with SoFi, They, of course, divested completely from their crypto platform because of their banking charter and SEC scrutiny. Do you think that that will change potentially under the next administration? And if it does, should SoFi relaunch their crypto platform?
If it
So
does, they're relaunching immediately, but I don't think it's gonna, be top of mind. Or like, I think they have their hands full for at least the next year or two with just the shit that Gensler has gotten them into directly relating to crypto. And this is sort of a tangential issue, if that makes sense, for them to open up, the floodgates for specific use cases like SoFi's, where they're a chartered bank and they're essentially restricted from crypto. Like that to me is more of a edge case than what their core mandate is going to be to start with.
yeah, sorry, remind me the question again. I literally just forgot.
So regulation, SEC, new
Oh, yeah,
chair.
sorry.
Okay.
So 100%. So whenever they took away, they had $2 million of FDIC insurance for a real while. And then they were realizing that the average account sizes were so small that they didn't need it. So they actually removed it. They've had it back since like 2019, or maybe it was 2018, something very early. And then they removed it. And then whenever Silicon Valley Bank ended up collapsing, they showed up with that product 2 weeks later because they already had the code and everything. They were ready to go. The crypto side is going to be even, like, I don't know when it'll come. Hopefully it's quick, but this could be a very long dated situation. But they will be back with crypto. Will the customer be back? I don't know. Like, I wouldn't want to start buying and holding my crypto at a place that, like, if you're not following what like the average SoFi customer does not know who Gary Gensler is. So they don't know why SoFi took away the crypto platform, and they won't know why it's coming back, and they won't believe that it's going to stay. So I wouldn't trust it. That's the only problem.
I'll again take the other side of that. Like I think that SoFi's existing, like I agree with you in terms of new people coming onto the SoFi platform to trade crypto. Like I just think that that's going to be somewhat of a stretch. But I think the existing user base, like how often are you on, your brokerage and they have a new promotion, or like, for example, one of the brokers here, they offered rewards now for hitting certain tiers of your portfolio, and they have partnerships. So like you get, what's one of them? Like you get exclusive access to like airport lounges, you get a certain thing on your will, or you get a certain discount on your mortgages, more preferable rates. So my point is people weren't looking for that, but since it's on the app, it's there, it's accessible, it's right in front of them when they open the homepage. They're going to dabble into that. So whatever SoFi chooses to promote in their actual SoFi Invest app, they're going to get a portion of that user base cross buying into that. So I do think that, yes, the average SoFi Invest person is probably not using crypto, or if they are, they're using it through other means because they physically cannot do it through SoFi. But once the actual app has it as an option, they're going to use it because it's convenient.
I just think, like, I remember how easily people remember what happened at Robinhood, and they feel like they never forget. But is that not going to be similar with SoFi, or do you think the new users are just not going to care? And
I think this is a whole different level. Like it wasn't a surprise or shock. It was, I guess, in one aspect, just how quickly they divested from that, because they didn't have to. They had another like almost 2 years, I think. But it was communicated well. My understanding, I wasn't in SoFi Bank at that point as a member. I am now, but my understanding is it was communicated very well, very clearly. Your funds didn't disappear. They were easy to access. Things were set up seamlessly. And I've heard anyway that they over communicated through that. So I don't think that they lost any trust from that. Like I don't see anybody bringing that up when I make a SoFi post at all. Versus Robinhood, yeah, there's still people that are sore about what happened with GameStop, and I understand where they're coming from. So I think it'll get some use and traction. I think that it's ready to launch on day one. I don't know how quickly it'll take, and it depends who gets in there. But if it's Dan Gallagher, who I'm hoping. Yeah, they're going to open up and make very, very clear regulation on crypto. Like he knows, and he comes from a place, of competency. Like he's been in the industry a long time. He's the chief legal officer. He's a practicing lawyer as well, I believe. And just like he knows what the industry actually needs there. So
what's his role at Robinhood, Roy?
Chief legal officer.
Okay, so if he's affiliated with Robinhood, and this is tinfoil hat stuff, but if he's affiliated with Robinhood, why would his first mandate be to give a leg up to Robinhood's competitor in the crypto space? Like SoFi has their hands tied in crypto, and Robinhood benefits from, being a bigger player in that space, from having less competition. Like, why would this person open that playing field up when he has a vested interest in Robinhood succeeding?
So my feel of it, and Tanner, you can correct me. You can say I'm absolutely off my rocker, but just getting a feel of the culture, talking to a bunch of different employees from different vectors, they're not focused on their competition at all. They're going after like the old guard brokers. They're looking to democratize finance. They're looking to disrupt the existing industry. They don't think about SoFi. They don't think about Block. They don't think about PayPal. Like they're just going forward full steam, and a little bit surprised of like why other people are not really imitating much of anything of what they do. I guess Webull is a little bit, but like they don't care about the competition. They know that they're the leaders. They're going from a position of confidence. It's kind of like if you are a perennial Super Bowl champion, you're not worried about like number 2 or number 3 in the league and what they're doing. You're focused on doing what you're doing and doing with excellence.
Yeah, I know they're not worried, but it's like, why would you even open that Pandora's box? Because it's not only SoFi that you're opening it to, it's every chartered bank out there. And that includes the big boys as well, right? So there's a lot of assets under management at these huge legacy financial institutions that you can open up crypto to, and you're just shooting yourself in the foot. Even if it's a minor shot because Robinhood has the best experience, whatever, like it's something that's going to hurt them. And that's all I'm saying is he's not incentivized to do that.
Yeah, I don't think, maybe it's me being naive, but I don't think that he or really any of the people that are considered, I don't know any of them personally, but are the type of people to go in and play favorites with their specific industry and company. I know that happens in government. I don't think that this is a place to do that. Most people that are bullish in crypto, they just want to see it revitalize and transform the financial sector. And the way that you do that is you make very clear regulation and guidance. You open it up and you play fair. You don't play favorites. You don't need to.
I think that there's a massive benefit to opening up crypto for everyone. Like if all the big banks, SoFi included, all start offering crypto, the average, like cost per Bitcoin or the total market cap of crypto in general may skyrocket, and that will benefit all players. So I think that there's also that sort of aspect, which is honestly the aspect that Robinhood has taken a lot, is that they're not trying to win on pricing. They're trying to win, sorry, I shouldn't say that. They don't care about how much they're going to make per transaction. They care about how many transactions they're actually making. They try to take the largest share of market share. So opening it up to the entire world maybe even gets people's feet wet to say, hey, you know what? I am looking for better pricing, and Robinhood's best in the market here. So SoFi could open up, and then here's something that I want to bring up though, because this has been sort of topic of conversation that I've seen online, and this is turning bearish. So I apologize, and
throw them out. Oh,
SoFi is doing a lot of great things, right? But I'm seeing a lot of comments online talking about how they're increasing the price of their ETFs. They're now charging for their ETFs. They're now charging for robo-advisory. Their, credit cards are good, not great. Their checking and savings, they're like almost everything across SoFi's products are good, not great. What do you guys think about SoFi as they really try to monetize more and more and more, that they lose being the best in class sort of product, and they're trying to aim to be top 20%, and users may not want that?
When were they ever best in class, and in what product?
Well, I mean, it depends. So one, definitely for lending, but whenever you're starting to offer things like fractional shares and all these new products in Invest or robo advisory, they're not whenever they were free, like
Yeah, but
those
like
were best in class.
none of that was revolutionary. Like they weren't first in fraction. Were they first in fractional?
Yeah, they were.
Yeah. They were first in fractional?
Yeah, they say it multiple times that they pioneered fractional shares.
I just think that their value prop is the fact that you can do everything. You know, it's the fact that it's all in one roof or all under one roof, and they don't necessarily have to be best in class in one individual segment because you have something that's good at everything. It's a jack of all trades, if you will. It's all in one app. And so I think they can still rest with that idea because of the power of the cross buying that they have across their entire user base. Like, you know, they don't need to over index on one product in particular. It benefits them more to just go wide instead of going very deep.
Is that how you use products yourself, though?
No, but if I had, like right now, my money is spread across 3 brokers and my everyday banking is 2 banks. And then I have 3 credit cards with different banks. Like, you know, and a lot of that is because of limitations and functionality that, you know, is offered. And that's a pain in the ass, honestly, to manage because I'm chasing small benefits that different, you know, brokers or companies offer me. But if I did have something that was, you know, good enough from what I'm looking for, like that convenience of having all under one roof is powerful. But at the same time, I also think that the 4 of us, as well as many of the people watching, are in that edge case of people who are informed enough to chase that extra alpha, whereas the vast majority of people who are not interested in finance content at 8 p.m. on a Friday night, you know, they will get whatever's good enough. And even if they're missing a couple of percentage points of, you know, spread or the payment for order flow or interest rate APR, then they're fine with that because that convenience in terms of the user experience is more important to them than the nitty gritty of a couple of extra percentage points.
Steve, anything on this? Do you think that SoFi needs to offer best-in-class products?
Depends what you define best-in-class as. I mean, you're never going to get best-in-class product at the cheapest price point. You pay for quality. So I don't think people should worry about pennies here and pennies there. Like if you want best-in-class, you pay for it.
I just now I'm not like I'm 100% for SoFi, everything like this. But could SoFi release a product the way that Robinhood released, you know, a gold card, or people would look at whenever they released their SoFi everyday card and an essentials card, and we'd all sit there and go, I mean, that okay.
Why can't they?
I don't think that's.
I mean, why can't they?
Well, because I think that they sort of fit in the middle of the rankings, where whenever you're sitting there watching a Robinhood event, you're like, oh wow, no one's ever done this before. This is the best. If I'm into futures, I have to switch now. You know? Now they're 2 different strategies. I just think like SoFi is willing to pay for a higher customer acquisition cost and look for a more profitable like unit economic type situation, right? Each individual product is worth more for SoFi. But for Robinhood, they cut on their costs and offer a product that people tell a friend about. 2 different strategies. But is that okay, Roy?
Yes. Yeah. I think that so the whole is greater than the sum of the parts. And if the ecosystem itself is very good versus like best in every single category, which is just unrealistic, that's compelling. Like I as a user, you know, as a member, I find SoFi's platform delightful. There's aspects of it that I'm not going to use, and there's parts that I'll criticize constantly because it's just really deficient. And you guys know what platform that is, Invest platform. But no, it's overall a very, very good user experience. Very, very good bank. That's good enough for me to recommend it to my kids. It's good enough for me to recommend it to friends that are looking for banks. I've done all that before. It's not just about referrals. It's so much better than Wells Fargo, than Bank of America, than JP Morgan Chase, depending on what you need,
Stop
right?
naming companies because you don't want to narrow it down for people. Don't tell people who you bank with.
Oh, well, I don't mind doing that, but no, it'd be weird if I'm holding SoFi and I've not even tried out the banking platform, especially with the incentives they offered. But no, I think it's very good. Now, the one area that they think that they do really benefit from and need to be best in class, or at least a nearly best in class, is the tech platform. And I don't know that they are. I think that they are, based on what I can tell from the platform, but we've not seen the results. And we are seeing like acceleration, for instance, for Pfizer with a similar business. I haven't seen Marqeta's, earnings. I've not followed that in a few quarters, but I'm curious if they're seeing acceleration as well. And if Galileo in Technisys, although it's mostly Galileo there, continues to lag, I kind of will begin to question that thesis, while others are seeing a lot of folks onboarding, partly because of Synapse and some other things.
Just to build on Roy's point, I think absolutely agree that the best-in-class aspect has to come in the tech platform on the B2B side. I think, though, on the B2C side, the best-in-class aspect, if I had to pick one aspect of their business, it has to be on SoFi Plus. Like, if we're agreeing that the value proposition moat is the ecosystem, like the sum of the parts is, or the whole is greater than the sum of the parts, then the benefits that SoFi Plus offers for members has to be so compelling that it drives hooks into people. It makes it impossible to leave that platform, because I might not be getting as good of a rate of return as like the Robinhood Gold card, for example, but there's all of these other benefits of being, in that ecosystem for SoFi, and I'm benefiting on all these other products that Robinhood doesn't have, for example, that I stay regardless. And so I do think that if there is an area that is a center of them driving that competitive advantage, it has to be the heart of that ecosystem, which is SoFi Plus, in my opinion.
Steve? I thought you were going to say something. Okay, so there was a bunch of people in your chat asking about why SoFi doesn't offer margin trading, like going back and forth. So I just wanted to clear up. They definitely do. Anyway, SoFi does offer margin trading, which is sort of a little bit anti get your money right. But yeah,
get your money mostly right. A little bit of DGen, throw in some meme coins in there.
Bit.
Just yeah.
And I don't think that their rates are competitive at all. But
they're not. Especially with the falling rates, like it's just. I think they'll cut that too. It's kind of interesting that I don't think that they have yet. They've cut their APR, but not that.
Yeah, I think like this is potentially the things that I'm like just looking out for, because I want to continue to monitor like SoFi's new products. And they said, coming on early, we were offering no origination fees and all of these things. And now on their product loans, they do origination fees on some of their products and everything. And it's just like, I just feel like the pursuit of what Wall Street is asking of them, which is just profitability at all costs, and SoFi is trying to deliver that for them, might be taking away from the original mission. And I don't want them to turn into another, Axos or Ally or one of these banks that just really does just become just a bank. Like, I want them to have best of class products, and they still there's still a lot of aspects of that. I just don't want to see it deteriorate. And they can do that without just giving away cash back as well. Like, it doesn't just mean, oh, the worst pricing. Come out with a credit card. Make sure that you add virtual cards or temporary cards with that, so then people can, make their purchases, but then also sign up and get rid of, like promotions that potentially they don't
Are
actually
you
want.
worried about the Trump administration?
Go ahead, Steve. Tell us about why Trump is good or bad for SoFi.
No, I mean, I'm just wondering if you're worried about them capping rates at 10%. Why are you putting me big?
No, go ahead.
Answer the question. Are you worried about him capping rates at 10%?
Can you
No.
please change the layout again? My brain is going to hurt for the rest of the episode.
Yeah, this.
Oh, I'm not worried about it. I'd have a hard time believing that would be the case. And if it is the case, I mean, bank stocks will just be dead. Like, SoFi will be dead. All banks will be dead. It's just really hard for me to imagine. And here's the thing too, is that what are all these banks? Actually, let me rephrase that. I don't think that they'll just all die. What I think will happen is the products will just change. So if you change a tax environment on billionaires, what happens? Do they just all of a sudden pay their taxes? No, they just create new ways to sort of avert the tax code. So I think that banks would do that too. Okay, you limit us on this. All right, there's more annual fees on credit cards. There's there's all new ways that they're going to start charging. Forget about no account fees. Every single bank, every deposit account will have $30+ account fees, because that's what they need to make their profit, and they will make their profit. So just in case anyone didn't see what we're talking about, there was Trump said that he potentially will cap interest rates for credit cards at 10%. It'll just kill credit cards, because the only people that would be able to get that are 800+ FICO individuals, and even then it might not be profitable, especially not at the cashback rates and everything like this that they're currently offering. So credit cards would just disappear.
Wouldn't that be like the most bullish thing ever for buy now, pay later?
Yes, I was about to say that.
Well,
yes.
Yeah, potentially, but then that's just going to become the newest product. Like,
yeah.
Does a firm become the leader of buy now, pay later in that sense? Or does JP Morgan, Wells Fargo, and Citi, that become their primary target?
Well, and SoFi would benefit from it too, because they have the capability through their tech platform of launching buy now, pay later. Do they not?
No, I mean, they do. But SoFi's primary source of income is personal loan refinancing.
Yeah.
I'm
just saying, like,
refinancing.
I'm not saying that in net they would benefit. I'm just saying that there is a benefit to them.
Sure.
It would also hurt them, because they're doubling down actively on credit cards right now, and that would just be a blow.
Yeah.
None of that would be any impact compared to personal loans just completely drying up.
Yeah,
that's the impact. That's the problem. Because who would refinance a 10% loan for a 13% personal loan?
Yeah.
And who would refinance at all if the loans can be float? Like, even the way people treat credit cards would just completely change. They would just float the interest rate.
Can he even do that? Like, I don't think that's a decision that he can make. Like,
not unilaterally. He has to do pass through Congress, but that
act of Congress, and they have 3 houses, so 3 branches, so could happen.
I don't know how likely that is. So that's not the biggest issue. That's not the biggest problem.
Not saying it's likely. I'm just saying it's a possibility.
A lot of those changes like that, and also Tevis, I was a little wrong when we were talking Bootleg Weekly and the impact of that, the tax rate, the tax credit for Tesla. Mostly the way that those are handled is not through executive order. It's very difficult to use executive order in that way, especially with existing tax credits or with interest rates. I'm a little less certain on interest rates. Maybe you could just write it with a pen, but it's unlikely. Most likely that's going to pass through Congress. And when that passes, It'll rarely be retroactive. It'll usually be proactive either at the beginning of the next fiscal year, which is October 1st, or more likely it'll be the following year just because it's easier on everybody's mind.
It certainly will be interesting. I don't want to say that this won't happen. Like even the 1.7 trillion, it's like, okay, like all these things are going to happen in our favor, but once it's not in our favor, that's not going to happen. Like they're going to come in, slash all these government things. Department of Education is all going to go. We believe in all those things, but once it gets to credit cards, no, because we're SoFi investors, you know. Like,
yeah. Well, so a lot of this though can change very quickly. As far as legislation passed, the market's forward looking, so that'll hit the stock a lot earlier than the actual impact of, a change that's coming in 2026. And they have a vested interest to pass through, whatever they want to pass while they have control of both houses, or the House and the Senate, rather.
the fight's not on, by the way, guys. It's in a couple hours still, but that was funny. It caught me off guard. Do you think regulators will let buy now, pay later charge massive rates if they don't pay on time?
That might be capped, but yeah, it's less regulated than credit cards. So it's a weird space.
I think there's ways that they'll get around it, man. Like, okay, you'll cap the interest rate at 10%. What are you going to do if you're SoFi? You're just going to charge a fee, and it's not, interest anymore, or you're going to have some other, like, you're going to adjust the risk reward so that you change the time frame or something like that. Like, you're still going to find a way to make it worth your while, even though that interest rate income is going to be capped.
Yeah, like origination fees are there to do exactly that, right? Pay upfront for what you would have paid in interest. So maybe that's what credit cards become: half semi-credit, semi-debit, and then you're paying only a percentage of it on not your money. It is interesting, but where do you put your money, Steve, if everything that Trump is saying ends up going through? Where do you avoid the tariffs, the all the loan or government loan? Sorry, I shouldn't say government loans, but government payments going away, these credit card interest changes. What's the safe industry? Don't say Palantir.
Well, you want the involved answer or the Cliff Notes?
Well, 7 minutes over, so Cliff Notes.
Cliff Notes.
Okay. So there's no such thing as a safe industry. Let's start there. But if you had to ask about risk mitigation, pipelines are still great value because you can't replicate their assets. It is going to be drill, baby, drill. There's going to be less regulation. And even if the price of oil comes down, pipelines are going to be great because they're not upstream producers. They get paid on volume. Their revenues are protected by fixed fee contracts and take or pay contracts. And the chances of a lot of windmill sites going up is slim. We know that we need more energy. You look what Southern Company said on their Q2 conference call. Over the next decade, they have roughly 200 projects coming online. I think 40% of them are data centers, and 80% of the energy that they're bringing online is getting allocated to data centers. We need so much more energy for the AI revolution. You have Japan and EU countries asking to buy American LNG instead of Russian natural gas. So pipelines will do well, most likely, because volumes are going to increase. You got a huge dividend payment there. There's a reason why Buffett bought 7,700 miles of natural gas pipelines back in 2020 from Dominion, and I think 1.29 million per mile. And you talk about exporting, you got a couple of these that have huge export facilities. Big tech is going to be big because Lena Khan's going to be probably the first one out the door. That means antitrust goes away. Amazon and Alphabet no longer threat of being broken up. You have Musk, Chamath, Sachs, and Lonsdale advising on technology. And they all understand that for America to be first in AI, you can't break those companies up. Otherwise, you put us at a disadvantage to our adversaries. So that goes out the door. So big tech could run, and specifically Amazon and Alphabet, in my opinion. Alphabet trades at like 17 times 2026 earnings. Amazon's going to be the first $1 trillion revenue company. So the big are going to get bigger because nobody can spend what they're spending. You look at CapEx, and if you believe in the AI revolution and how big this is going to be, Amazon has spent $64 billion in the past 12 months on CapEx. Alphabet and Microsoft have both spent just over $49 billion. I think it's 49.3 and 49.5. No other companies can spend this type of money. Nobody else is coming close to them in cloud services or AI. Nobody. Palantir is different. That's a software suite. But I'm talking about generative AI infrastructure on cloud for businesses. Nobody's coming close to these three companies. And they're going to be investing for the future. And I don't think we can fully understand how revolutionary it's going to be and how much it's going to increase their earnings. These companies are not spending this type of capital just to waste it. Not happening. They're going to innovate and drive the industry forward. So those are the two areas that I would really be looking at. There's a couple of other plays I think are going to be pretty good. But if you talk about risk mitigation, I don't know how you go against Alphabet and Amazon in the pipelines.
I think that's a good sum up. The SoFi Weekly is going to become the Amazon Weekly. Steve, what do you think of Amazon Health? Ladies and gentlemen, thank you all so much for watching. I really do appreciate your time. I don't actually want you to answer that. That was just a joke for the HIMS guys over here that are.
Yeah, I mean, I don't know what HIMS. I don't know why people think HIMS has a moat.
No. You're talking to two big bulls here. These guys will rip your head off.
This is the whole Celsius. Listen, this is the whole Celsius argument again. When I said the margins are not attractive.
Nope.
And now with RFK being involved,
margins.
Get ready.
It's not Celsius. I looked side by side at the same time with Celsius and with several other companies and also HIMS. HIMS, shockingly good. There is a real moat. Celsius, I looked at it as a trade. I got burned by the trade. It was a time trade, and I'm like, I'm exiting. Even though the price has gone down, if you look at the multiples, it's like, hey, this is pretty attractive. It's not, because it is absolutely a commodity. What HIMS has, half of their business is commoditized. The other half is not, and you're completely wrong. But that's something for the after hours.
Ladies and gentlemen, thank you all so much for watching. I really do appreciate your time. But bye for now.